Good afternoon, everyone. Welcome to today's Daily Recap. I'm Evan Lazarus, CEO of T3 Live, and I'm here to recap the day's action for you. And there was some action. If you happen to catch the morning call, I'm going to kind of follow up on some of my comments from earlier this morning. And I did a pretty good, or what I thought was a pretty good analysis of the market. And I used the spiders here as the S&P 500, just as kind of a proxy for all things stock market. And we did some time frame. We looked at a couple different time frames, and I really wanted to show the monthly chart because the month of January is now in the books in terms of trading, as January 15 has now come and gone. As of December, what was interesting about December, and I'll kind of make some highlights as I go, is that the market kind of put in this very interesting looking candlestick. You can see this, tails on both ends. We call this, a lot of technicians will call this a doji. But what it really does, above and beyond the silly name, is it shows typically a slowing of momentum. And a lot of times when you see these dojis, they will be, especially at the end of what is a directional move, whether that move be up or down. And in this case, we're talking about a very long, trending type of move going back as early as, you can make the argument, we bottomed in, at the beginning of '09, but really let's call it, the middle of 2011 through the end of 2014. And this, like I said, can be a precursor for some sort of change of direction. And the month of January has not been a strong month. It's actually been a relatively weak month, from start to finish. And you can see a pretty substantial down move here for the month of April. But what's interesting, the month of January, excuse me. But what's interesting is that it's an inside month. And not to get overly technical here, but it's worth noting that the month of January's high and low, was contained within. We did not exceed December's high or December's low. Now we came close to the lows, but closing just within that. Now this to me tells me that we could be setting up for a change. Whether the change is a pullback that lasts 3 months, or something that is more substantial, that lasts, a longer period of time, it remains to be seen. That's, kind of the way I'm reading this bigger picture chart. Now, most of us, myself included, we don't really trade off of monthly timeframes. This is really more of an investor, longer term approach, which is fine. But it's worth noting because I think when, as you approach the markets, whether it's on a week by week or day by day basis, it does make sense to create a story and I'm creating the story not out of the figment of my imagination, but out of the language of price. That, there's a reason that these candlesticks have these shape, size, form, and they do what they do, and it does represent the psychology of the buyers and the sellers. What I also have up on here is just a basic, Fibonacci retracement, tool, and I basically, marked off what as it stands right now, what is the the '09 lows from where we bottomed, a few years ago right here to, this high of December, and this to me marks both, a high and low. Now, obviously, we can clearly look in the rearview mirror and we can definitively say, okay, this was the bottom. Although when these happen, you never really know until it's well after the fact. And the same thing here. I'm making an assumption we've seen some sort of change or pivot here that will, reverse direction. And the reason that I'm doing that is because I want to put it into perspective. If you are trading a stock or a market and you look at, healthy corrections, typically a healthy correction is something that is considered, above 50%. Now the 50% retracement mark is right around here. A very shallow retracement is a 38% retracement. That's really the sign of a market that is, ultimately very, very strong. So what does that mean? Well, it means that, we can trade back down, to this 38% mark, which is right now SPY, 1550, 1600 kind of thing, and still have this be, in the broader sense of it, a healthy correction. Now, us, I think many of the active crowd is so consumed by the day to day and even the week to week that to say something like, we could trade back down to 1500 would right now, as I say this on January 30th, might seem, will probably invoke some hate mail and some people on Twitter coming at me, which is all fine and well. But I think in the whole scheme of things, from my vantage point, nothing when it comes to the stock market is out of the question. Nobody really could have guessed that 2007 and 2008 would have looked the way it did, but it was, and nobody could have assumed that going back to the the early 90s that the market would have done what it did. Nobody has that kind of foresight as we go back in time and look at what the market has done, over the last, let's call it 20 years. And just looking at the structure, the rate at which this market has been rising, just in terms of the angle that it's been ascending, is pretty steep in when you put it into context of the last 20 years. So, 38% retracement just happens to be coincidentally, this initial breakout from the highs that we saw back in '07. You look at these highs right here. This market that kind of peaked back in 2000, and then again in 2007, 2008. 38% retracement ultimately takes us back to test, or what could be to test, this breakout. So is it unreasonable to think that the market is going to trade back to that level? I don't think so. Now, is it going to do it all in 1 week? No, it's not. This took, 2 years plus to develop, just kind of marking off that level again. These highs, from the time we broke, these highs right here, this took, this was basically, early 2013, I'd say somewhere in the end of the first quarter in 2013, maybe around March or April. We broke out, we broke to new highs in the market in the S&Ps, and since that point we've been kind of chugging along, month by month here, kind of slowly grinding higher. So I don't think that when we talk about the bigger picture, and I know that that's a term that gets thrown around a lot, that's really out of the question. Now, I think that the question really is, if we do start to trade down, is it going to be in a panic-driven mode like we saw here, where this market just, unravels like a cheap sweater, in a matter of, 2 or 3 months or 4 months or whatever, or is it going to be more of a very methodical, slower, controlled, down, slower, time-consuming type of price movement where it grinds lower versus, unravels and panics lower. Typically, when we've seen, down moves or sell-offs, they've been fierce, but they've been quick. Even in the whole scheme of things, what was the year of 2008 or the year of panic and the year the world was coming to an end, it really did unravel in a matter of, let's say, 5 or 6 months. So I think that's what we've been accustomed to over the last 20 years of trading, that downward moves have been vicious and fierce. I don't know if that's going to happen this time. I'm not here to tell you it is or it isn't. That's not really, I don't have that ability. I think we'll know when it's upon us. Typically, when fear sets in, it's a much faster moving trade. But this may be a slower developing market. It may be a market that kind of pulls back or goes down on without necessarily the panic ensuing until maybe the tail ends. I don't know, and I'm making assumptions about a lot of things here, and I'm clearly aware of that. I'm just trying to put together a story that many of you can kind of see visually and understand how I, created that story and why it makes sense. Now, as we look at the daily, today was interesting because at one point we were, it was a nice, we gapped down and we rallied up, filled our gap, and at one point, the market was looking like it had some life. This is the first time, if I zoom in a little bit here, where we've actually held an average. What do I mean by that? Well, it's the first time that we bounced off of support, but then ran into this, 8-period average, and right here you can see that's where the market, tailed back down. Whereas every time we've held support, we've kind of just traded all the way back up. We've traded all the way back up. These averages haven't really come into play in terms of support or resistance. We've been trading, kind of along this line and kind of along this line. But as I said this morning, the difference on this bounce, clearly to me is that, what today tells me is that clearly this, what is now a declining 8 came into play, as that's where the market found its resistance today and did sell off. The more we continue to like I said this morning, the more we continue to, keep knocking on this floor, the weaker it's going to get. And I suspect we could take out the January lows, which are, like I said, down here in a matter of, at this point it could be days. The market could be setting up for, a break of the January lows come early February, where we might see price action start to, unravel a little bit. If we do take out these lows, I suspect our next price target is going to be somewhere down around, the low 180s or the October lows, right here. So I think it needs to be watched very, very closely going into early next week. As today, I know it might not seem like it, but I think today was a day where we actually, the market kind of tipped its hand a little bit. So now we have, clearly a market that has made a lower high and looks to me like it wants to potentially break those Jan lows. So we're going to watch that early next week. Apple, also an interesting, looking chart here if it comes up, as it, tested the prior highs here around 119.75, 120. It tailed through by a few pennies, but then sold off pretty hard. So we did see that reversal off of prior resistance here in Apple. And I think that, again, these are areas where, there was clearly a strong resistance here that drove this stock back down, found some floor of support, rallied all the way back up, on its earnings, and then again, reversing back at that level today. So, now becoming a much stronger area of resistance. And I'm not suggesting that it turns all the way down, but we have to respect, what the language is, what price is telling us both here and here, and trade it accordingly. On that earnings front, just to follow up on some of the things I spoke about this morning, Amazon traded up, and it filled. Looks to me like it filled that gap, as I suspected. There was a chance that it would do that today. This gap, being filled right around here. So came up, traded into that price target, and then kind of tailed down. But overall, a big change in the general, in the general charts. This chart looks honestly very much like the Netflix chart, where you had this big gap down in price back, 2 earnings seasons ago, and then you have this big gap up in price. It's almost eerie how these two stocks. Now, granted, they're not identical, in terms of price movement to the exactly, but the general concept is that this big down, this down gap basically gets filled today, but in doing so, it now leaves this, this big open zone, which is now, an open gap that I suspect is if this area of this resistance becomes significant, may ultimately turn back down. So we'll see. There's definitely lots of interesting chart patterns happening here. There's been a lot of earnings trades that have been, relatively weak. We've seen a couple of strong ones. I see a lot of stocks, trading lower. Granted, it's been not an easy trade. It's not like it's a straight path down. It's been very, very choppy from week to week to week. But there's definitely been some, carnage along the way. Google today, as much as it had this, sort of this big bar, it didn't really go anywhere in the whole scheme of things. If you look at the weekly, I don't know that we really traded out of any real range. You still have, this sort of lower range developing, and a lot of overlap in here. Down, up, down, up. It's definitely more of a very, very active, quick traders market right now than it is, I think, anything else, until at some point, some little clarity comes in. Banks, we look at FAS. FAS is an ETF, a financial leveraged ETF. or the XLF, clearly breaking down. This is a weekly chart and undercutting its lows here. This pattern is pretty weak, where it looks like it kind of topped up in here, had this sell-off, then bounced. The bounce was pretty weak, and now the sellers have taken control again. So we may be trading, as far as financials go, we may be making a play back into those October lows again, or somewhere in that general range, as there's not a whole lot. Once we really broke this level right here, there's not a whole lot of support in this general area. This is pretty much an air pocket. So we'll see how that plays out as well. So, like I said, very, very interesting market right now. It's definitely a trader's market in the sense that there's opportunity from whether you're an intraday day trader or a longer term, swing trader or anything beyond. You just have to pick and choose your battles very wisely here. Make sure you are creating the story. If you're pulling anything out of my morning calls and my recaps, it should be how I go about evaluating charts and creating stories that fluctuate between both weekly and daily charts, because it gives you a very clear sense of price movement and direction and trend, and when something is changing, if of course you know what you're looking at. I will say we rolled out our first short-term trading lab. Was a full week intensive real-time trading lab, and it was amazing. So for those that that are interested, shoot an email and we'll make sure you get set up. I think February is already sold out for the trading lab. But you can always email customer service at T3 Live and inquire. I think March still has a couple open slots. We only keep it to, I think, about 15 people to make sure that you really get the hands-on learning. But we just finished up our first lab this week, and it was really quite an experience, and I know everybody there had a great time. So, if you find yourself wanting to know more, and even if you're listening to what I'm saying, and you'd like to understand how you can learn to evaluate your charts and structure and technicals more proficient, shoot us a note, and we're happy to help. That's what we do. That's all we do. And I hope everybody has a great weekend, and hopefully I'll talk to you next week. Take care.